Welcome to the course on Foundations of Accounting and Finance. Now, there could be some kind of a question that would pop up, that looking at the title, Foundations of Accounting, Foundations of Finance, what is it going to cover? What are the aspects that will be touched upon? At what level is this pitched? For whom would it be useful, etc., etc. Let me try and see if I can address all that before we even get onto the course. This is a very basic level course, I would say level 1 out there of this course on accounting and finance foundations. This is a very fundamental course. Level 1, that is the first level of course on to have some basic knowledge in accounting and finance. In accounting, we cover two aspects of accounting, that is the financial accounting aspect, little bit of the cost accounting aspect, and in finance we cover a bit of corporate finance. In financial accounting, we talk to you about the basic three financial statements and how these financial statements are prepared. I am not going to drill deep into the formal preparation, the method of preparing a financial statement. No. What does this financial statement contain? How do you read these financial statements? How do these financial statements interact between each other? In the sense that when a transaction occurs, how are the financial statements impacted is what you would try to understand. The objective is tomorrow you sort of see a financial statement, see an annual report, financial statement from an annual report of a company or something. These terms do not look like Greek and Latin to you. You are familiar with the terminology is there, and you will also try and see how this financial statement basically is in this particular shape, in the sense what are the transactions that could have impacted the various assets, liabilities, or your revenues or your expenditures and so on and so forth. So, this gives you a overview of financial accounting. So, it gives you some basic knowledge of financial statement. What are they? What are the contents? How do they interact? What are the use of this financial statement? Some basic zero level analysis of this financial statement also can be, we sort of cover as part of this course. We move to the cost accounting part. In that again we cover some of the basics in terms of what are the different categories of cost, what are the behaviors of cost, what is kind of direct cost, what is an indirect cost, how do costs vary, and how do you look at break even, and how do you make decisions, some of the basic fundamental decisions of your product mix or pricing and so on and so forth using these kind of information, the cost accounting information part. Then in the finance part, the third part of this course, we cover again the basics. We start with something called time value of money, the basic concept of time value of money. We touch upon a little bit of these evaluating projects in terms of your net present values and IRRs and so on. Idea is to help you understand what are these, what is an NPV, when is it used, how is it used. I am not going to give a dozen problems out there for you to work on and then practice out there. No, I am not preparing you for taking an exam in corporate finance, but giving you an overview of this. Same way we look at your capital budgeting, we look at your cost of capital part of it, we look at what is the kind of combinations of debt and equity and so on, and the dividend policy and so on and so forth out. And we will be using, I will be sort of referring to these three textbooks. These three are the prescribed textbooks for this course. Sir, why are you giving three textbooks for this course? Because we cover three different parts out there of accounting and finance put together. So, I am using three different books. Am I going to sort of take this textbook and cover chapter by chapter out there? No, that is not what we are looking at. We are looking at, from this book, we pick up a couple of basic important aspects and we cover. Of course, you can refer to this book to gain more knowledge on and so on and so forth, or if you want to practice some numericals or problems, etc., you can always refer to these textbooks out there. For financial accounting, I would be using the Accounting Text and Cases by Robert Anthony and David Hawkins and Kenneth Merchant. And for the cost accounting, I use the Managerial Accounting by Garrison, Nolan and Bower. And for the corporate finance, I will be using the Ross Westerfield and Jaffe. So, I will be picking up problems from these, some of the problems which I solve from these books. I will be using some of the material that is there in the textbook, in this prescribed textbook, be it in the form of PPT slide or in the form of my explanation and so on. So, you can refer to this. Do I have to buy this book? Well, not mandatory, but I would be referring to these books. These are the prescribed textbooks out there. If you can have access to a library and then pick it up and then go through it, it will be good, and I leave it to you. Now, coming back to the course, whom is it going to be helpful? I am going to take a competitive exam, or I am going to take a particular exam in a finance or in accounting or something. Is it going to be helpful? Well, I would say yes and no. Why yes and no? Because yes, because this will give you an idea about the concepts that we are sort of looking at in accounting and finance. For example, when you say balance sheet, what is a balance sheet? What does it contain? How does it interact with, how does it get affected by every transaction? Yes, you will intuitively understand the logic behind the whole thing. But am I training you in terms of working out some 100 problems out there and then taking up an exam? No, we are not doing it. So, that is where I give a yes and no answer. So, this course will give you an idea about basic accounting fundamentals of financial accounting. That is why we termed it as foundations in accounting and finance, fundamentals in basic accounting, both financial and cost accounting, and as well as in corporate finance. Whom is it going to be useful? It could be useful to anybody. It could be a person working in industry, now wants to understand, basically out of intuitively wants to understand. Yes, this will give you some idea. I am moving to the next level in my organization, where I will have to get some hang of these numbers. Well, this will give you some idea. I am a college student, I am pursuing a course degree or an undergraduate degree in accounting and finance. So, I want to understand conceptually, I want to understand more than the practice. Yes, this course will help you. So, it is more a fundamental course which is going to give you or tell you what is going to be the what is financial accounting, what are the aspects, and what are the three financial statements, how do they interact, basic idea. Same with cost accounting and same with corporate finance. So, in that sense, it is a fundamental course, a level 1 course if you want to term it. Yes, a level 1 course. Whom is it going to be useful? If somebody has thorough knowledge about all this, then you do not have to do it. Somebody wants to get some idea about this, about these accounting and finance, well, this course is going to be useful. It is a 30-hour course where we spend a lot of time, about 50% of our time only on financial accounting, because that forms the basis when we even do your corporate finance out there. So, I spend about lot of time, about 40 to 50% of the time on financial accounting, followed by cost accounting and managerial accounting, and then corporate finance. Now, coming to the specifics, why do I term it as accounting and finance? Now, what is the difference between these two itself? Let me start with what is the difference between these two, what are the contents of these, and so on and so forth. In accounting, I will further classify into two different parts. One, I will normally call it as financial accounting. Another, I would term it as cost or management accounting. I am using these things interchangeably, cost and management. Now, what does financial accounting do? Or what is accounting? What is financial accounting do? Financial accounting deals only with number, if I have to be very, very specific, deals with recording a transaction. Every transaction that happens, all that the financial accounting does is records those transactions. What do you mean by record? Supposing, let us say, you have about 10,000 rupees in your wallet and you go shopping and you keep spending, you keep buying a lot of things, you keep paying cash and buying, and as and when you keep paying cash and you keep buying, I come back and record those transactions. That is, I spent so much of X amount of money for this, for purchase of a particular item in shop number 1. I spent Y amount of money for purchase of another item in shop number 2. I purchased an item in shop number 3, but I did not pay. That fellow has given me credit for 30 days. Yes, there is a purchase that has taken place, that is, there is a transaction that has taken place, but I owe the money to that fellow. Now, I am recording all these 3 transactions out there. First transaction, I paid money in a shop X, got the goods. Shop B or shop number 2, I paid money, that fellow will supply the goods little later, I have given him an advance. Well, I am recording that also. That is a transaction that has taken place. When money has been transferred, transaction has taken place. Third shop I go to, I have not paid, that fellow has supplied me the goods, he has given me 30-day credit. Now what is happening? There is a transaction taking place, no money transferred, but there is a goods that has been transferred to me, transaction has happened. So I will record all these 3 transactions. How I will record? Don't worry about it now. When I say transaction, it means exchange of any good or service. Whether you have paid for it, you have not paid for it, you have paid in advance, all that we will say transaction out there. Any exchange, if you give money awaiting a good, then there is a money transfer that has happened, there is a transaction. If you purchase a good without paying but to be paid at a later stage, transaction has happened, that is, the goods has transferred, the ownership of the good has transferred out there. Third, I pay money and I buy the good. Transaction has happened. You have paid money, the ownership of the money has transferred, the ownership of the good has also transferred out there. So, all these are transactions. When I record those transactions in the books, that is what I do typically in financial accounting. I repeat for the purpose. Let me move ahead and let me repeat this for the let me repeat it. I said transaction number 1, I pay and then I buy. So what has happened? The cash, 10,000 rupees of cash what I had in my hand, say let us say 7,000 rupees, out of the 10,000 rupees I have paid. The ownership of that 7,000 which was with me has transferred to somebody else. Transaction has taken place. That fellow has given me the goods worth 7,000 rupees and I have taken possession of the goods worth 7,000 rupees. So what has happened? The goods which were with him, ownership was with him, has been transferred to me. Now I possess the goods and I have paid money. So transaction has taken place, that is I pay and buy, transaction. Next one I said, I pay advance. I paid money, the other 3,000 rupees what I had, I have paid in the shop B or next place. He has not given me any money, any goods still, it is only an advance. Well, is it a transaction? Yes, it is a transaction. The ownership of that 3,000 rupees which was with me has now transferred to that fellow. He is owning that 3,000, he is holding that 3,000, it is his money. So what has happened? Transaction has taken place. Now number 3, what did I say? I buy, pay later. Even their transaction has taken place. That is, the goods which he owned, he has given it to me. I have taken possession of the goods as of today. So what is happening? The goods which were his, he has become mine now. I have become the owner. So what has happened? A transaction, I have not paid. I will pay. I am liable to pay. I have to pay at a later stage to him. Well, transaction has taken place. All these three are transactions. Now, the way I record these transactions is what I do in a financial accounting. How do we do it, record it, how do we consolidate it, etc. All that we will look at a little later stage as far as this course is concerned, but typically to be make it very simple at this stage, I said that in financial accounting all that we do is record the transaction as and when the transaction takes place. How we record, what are the methods of recording? Just wait for a couple of minutes. We will go to all that. So, recording of a transaction is the activity that is carried out in financial accounting, basic activity, the primary activity. Recording of a transaction is the primary activity that is carried out in a financial accounting part of it. Now, I move to the next one, that what we call it as cost or management accounting. I am trying to use a different color. Now, having said this, the cost or management accounting is predominantly for internal use of the organization. Now, sir, then you didn't talk about financial accounting. For whom is it used? It is, please note, it is both for internal and external users, stakeholders. Instead of users, I will say external stakeholders. What do you mean by external stakeholders? Now, let us take an example. Before I move to cost accounting, I have not moved to cost accounting. Let me go back to financial accounting. I am going back to financial accounting. Who is using financial accounting? It is of course necessary for within the company to manage their numbers, manage their cash, manage their payables, manage their receivables, and all those aspects. Once this is sort of consolidated, etc., it is also used by the external stakeholders. When I say stakeholders, it could be, I would say, why external? I would even say external / internal stakeholders. Let me rewrite it more legibly. Internal / external stakeholders. First stakeholders, the employees of the company. They need to know what is the cash position of the company, they need to know the performance of the company. Well, they will also, as they could be internal stakeholders. There are people who will provide loan to the company, debt to the company, maybe a bank, maybe a financial institution, etc., etc. They will also use this financial accounting information because they also need to know whether the company is collecting cash, whether the company is making profit. Based on every transaction that is recorded, they will be able to assess whether the company is in the path of making profit, whether the company is in the path of having sufficient cash flows, so that they will receive the money back which they have lent to the company. Why? Because when you record all the transactions, you will know what is the cash position in the company, what is the profitability of the company, etc., what is the asset holding of the company, etc., etc., etc. So, that information is useful for both the internal and external stakeholders of the company. External stakeholders could be anybody, could be even the government, because government needs to know, they need to collect what is called as the taxes on whatever the profit they make. So, they will certainly look at the profitability of the company, and they will know what is the amount of tax they need to collect, or what is the amount of tax that they are eligible to sort of receive, and so on and so forth. So, when I talk about financial accounting, it is recording, yes. In next stage, that is what I said, primary step is recording. Now, the next stage, once you record the financial state, once you record a transaction, that recording will basically lead to what you call it as the assessment of the financial position of the company. Assessment of the financial position of the company, primary recording. Once you record, you will be able to assess the financial position of the company. When you assess the financial position, when I say financial position, it could be the cash, it could be the receivable position, it could be the payables position, it could be the asset position, it could etc. out there. When I say receivables payable position, that is how much of money the company has to pay payables, how much of money the company has to receive for the goods they have sold, what is the current cash they have, what is the borrowings they have, what is the amount of interest payment they need to make on the borrowings, etc. All that can be analyzed, and that is what we call it as assessing the financial position of the company is what we can do with the help of the transactions that are recorded. So, primary step to record. Based on the recording of the transactions, we move to the next stage, and that is where we say we will look at the financial position. And when we look at the financial position, naturally that financial position, assessment of the financial position is useful for whom? Both the internal and external stakeholders of the organization. Stakeholders can be anybody, can be government, can be employees, can be creditors, can be shareholders, because they need to know what is the profitability. Depending on the profitability, they will know what is the dividend, they will know what is the market price of the share, so on and so forth out there. So, it could be a broad term external stakeholders, broad term internal stakeholders of the company also. It could even be competitors, because I need to know the financial position, and financial position can be known only when you record the transactions. So, that is what financial accounting does. With you on this? Now, let us move to cost or management account. I said this is not for the external stakeholders at all. This is internal to the company. This is internal to the company for what do you call it as, for decision making. That is where this we call it as management accounting. It is for the management to make decisions. Now, what kind of decisions? Imagine I am manufacturing automobile parts, spare parts. I need to know what is the price at which I need to sell. I need to know what is the cost of manufacturing. I need to know what is the profitability given the volume, with what do you call it as, with the volume I am going to sell. I need to know whether how do I fare in comparison to my competitors. I need to know what is the basically, is it worthwhile to manufacture, is it not worthwhile to manufacture, yeah, and etc. when I say comparison to competitors, etc. So, I am saying at some stage I see my cost of manufacturing is very high, my profitability because of that given the volume is low, then can I go back and rework on the cost components that are there in what do you call it as the that go. The cost components could be, I could buy various kinds of material, I could have various kinds of overheads that are incurred by manufacturing, then I could incur a lot of other what do you call it as administrative costs and so on and so forth, and then I could have a selling price out there. So, I need to know how do I arrive at the selling price, what are the components of cost, and so on and so forth. I can make decisions whether to manufacture, not manufacture. I need to look at couple of aspects in these things. When I say cost accounting, that is, for example, let us take another situation. I manufacture 3 different kinds of parts, part A, part B and part C. But I do not have the plant capacity to manufacture all the 3 parts given the kind of demand that is there. I need to prioritize which part should I manufacture more, which part should I manufacture less, and so on and so forth. Now, cost accounting information is useful because I will know the cost of each of this product, I will know the selling price of each of these product, I will know the margin that I am going to have on each of these product, and then I will prepare what is called as my product mix out there. What are the kind of products I need to manufacture more, which product I need to manufacture just a little, etc., etc. out there. I need to do my pricing, I can do my product mix, and so on and so forth. So, any decision that is to do basically with for internal for the management out there, I need these kind of basic information, the cost part of information. Now, that entire process is what we call it as management accounting. That process of collecting this information, analyzing this information, and then finally arriving at a decision. Decision could be make the product, do not make the product, cut the cost, do not cut the cost, cut the overheads, or etc., whatever may be the decision. So, that is what we call it as management accounting out there. It is a couple of aspects that we do. We can even do what is called as budgets. I need to forecast what is going to be my cash flows for the next 3 months or 4 months. Because I have to plan, because organizations always keep planning their cash. It cannot be, I cannot suddenly wake up in the morning and see what is the cash I have, I am falling short of cash and I need to run for cash. No, that cannot happen. You need to forecast. You need to forecast your, the kind of products that you want to manufacture, the number of units of each of these products that you want to manufacture. You cannot just close your eyes and say today morning I am in a mood to manufacture product A, I will manufacture product A, or tomorrow I am in a mood to manufacture product B, I will manufacture product B. It does not happen that way. You need to forecast based on the demand and etc., etc. For example, imagine you are a OE supplier, original equipment supplier to original equipment manufacturer. Your decision to manufacture is dictated by the OE manufacturer. The original equipment fellow, the automobile original equipment assembler will give you the number of units of each type of product that is manufactured every day, and accordingly you have to make your spare part, whatever the auto ancillary will have to make their parts and supply it to the original manufacturer. So, you do not have the choice, that is dictated. So, based on that you plan your activity, you plan your procurement, you plan your stocking, you plan your labor force, you plan your your production activity. This entire process we will be basically using it for decision, but that is the entire process is what we call it as decision that you make, the decision that you make, and this is all made based on cost accounting, management accounting information. Simple example, I am going to take one more example. Imagine I manufacture only 2 products, product A and product B. I have some specific cost for product A, I have some specific cost for product B. But both the products are manufactured in a single shop floor. Now, I need to arrive at the cost of each of the product A and B. Sir, it is very easy. Whatever is the components that are basically used for manufacture of product A, you put all of them together, you will have the cost of product A. Whatever components that you use for manufacture of product B, put it together, you have the cost of product B. Agreed? but they will always be common cost. For example, I said these two products are manufactured in a single shop floor. I pay rent for that shop floor. These two products are supervised by a single supervisor. I pay salary to the supervisor. Now, how do I divide? I am just taking a very simple mundane example. How do I divide the cost of what you call it as the rent that I pay for the shop floor between these two products, product A and product B? How do I divide the salary that I pay to the supervisor between product A and product B? Only then I will have the full cost of product A and product B. Otherwise, the cost I have is only partial. To have the full cost, I have to divide these costs also between A and B. Only then I will have the full cost. Now, that process, that entire process of what is called as allocation of those costs, common cost, etc., is all carried out. That decision of allocating these common costs is all carried out with the help of what do you call it as cost accounting or management accounting information. So, in that sense it is internal. Obviously, it will be internal. It cannot, because your competitor should not know theoretically your competitor should not know what is your cost, because if your competitor knows what is your cost, he will go back and squeeze a little more and lower his cost and sell it at a lower price, and you are out of the market. So, these are all very confidential information. These are all confidential information. So, this is all internal. The profit what the company makes on each of the component that they sell. For example, I manufacture mouse. Every mouse I manufacture, I am making a small profit. What is the cost of manufacturing the mouse? What is the price at which I sell a mouse? What is the margin I am making on each mouse? It is internal to the organization. It is not basically for public consumption. So, that way cost accounting information is used for internal decision making, various kinds of decision. Pricing decision, yes. Cost control decision, yes. Cost allocation decision, yes. So, various kinds of decisions out there. That is all that we do in what we call it as costing or management accounting out there, and that is the second vertical of accounting. There are two verticals. The first vertical I said financial accounting. It is both for internal and external stakeholders. It is basically primary objective is to record the transaction. Once the transaction is recorded, it is consolidated, then that once your transaction is recorded, you will be able to assess the profitability or the cash flow position, or in short the financial position of the company, and that assessment of financial position of the company is used by both external and internal stakeholders. Cost accounting or management accounting, purely for internal decision making. Internal decision making, I'd say I want to look at look at pricing a product, I want to look at costing a product, I want to look at cost control mechanisms, I want to look at what is the profitability of each of the product that I manufacture, I want to do the budgets, my cash budgets and my production budgets for the next 3 or 4 months, so on and so forth, internal to the organization. So, these are the two broad verticals when we talk about accounting out there. Now, more in detail about each one of these we will take up as we go along in this course. This is a 30-hour course. So, as we go along in this course, we will take up all those aspects out there. Now, having done these two basic verticals of accounting, now I move to the next one, that is what we call it as finance.